Extending a warm welcome to everyone for our Q3 9 months FY18 earnings conference call for the third quarter and 9 months ended December 31st, 2017. I have with me our investor relation partner, Bridge Investor Relations. We have shared our result updates presentation, which is uploaded on the exchanges, and I hope you must all have gone through the same. First, I would like to take you through the company in detail. As you are all aware that Lasa Supergenerics Ltd is a demerged entity of Onkar Specialty Chemicals Ltd. Lasa was acquired by Onkar Specialty Chemicals in 2011 and with a turnover of Rs 1 crore at that point of time, and was into veterinary API manufacturing business with a state-of-the-art plant having an FDA-approved facility. We saw a lot of value in it and could foresee immense scalable business proposition in it. Lasa got demerged from Onkar in June 2017 and got listed in September 2017 with a 1:1 ratio. In our product portfolio, we have a variety of anthelmintic offerings. We initially started with just one product when we acquired Lasa. Today, we are manufacturing 15 different products in veterinary basket. The product segment that we cater belong to anthelmintic derivatives in veterinary pharma space. We manufacture benzimidazole class of APIs, and this is a very old essential part of the veterinary health system and one of the most difficult to manufacture products. We also manufacture amides, imidazothiazoles, piperazines, etc. This all together form almost 70% of the anthelmintic market. Some of the products that we manufacture are albendazole, fenbendazole, alquinol, oxbendazole, ricobendazole, etc. I myself have completed my PhD from UDCT, Mumbai, which is one of the most elite engineering university in India. My expertise lies in the field of catalyst development in organic chemistry. We have made tremendous use of this skill and have developed different class of catalysts. This has resulted in creating great economical model for our operations. By using catalysts, it improves the rate of the chemical reaction and increases the yield of the reaction, thereby increasing the gross profits. This results in lower cost of raw materials usage, effluent, and increased output. The basic raw materials for us are most often benzene derivatives, which are derived either from crude molasses or else from petrochemicals. There are very few suppliers to us for our raw materials. Over a period of time, we have realized that the raw material price fluctuations were resulting in a lot of margin fluctuations. At the same time, dependence on suppliers for raw materials was also putting more pressure. Hence, we moved into backward integration, and today we are almost a fully backward integrated company to a large extent for most of our products. We are trying to match steps with the rapidly growing economy with one of the goal in mind, and that is to become a foremost player in the area of veterinary business activities and established ourselves as a trusted supplier of veterinary drugs. Not only by making our processes fully backward integrated, but also entering into forward integration in near future. Today, we have 4 state-of-the-art approved manufacturing facilities located in the Konkan belt. These are vertically integrated manufacturing units, and we also have our in-house R&D lab where we developed our own catalyst. We have a strong pipeline of process patents which we have filed in the Indian Patent Office. Developing catalyst-based processes will continue to be one of the focus areas, and this will help us to create entry barriers and help us maintain a competitive edge. We are very pleased to inform that the company shook hands with China's CIDIC Group. CIDIC Company Limited is one of the pharma giants in China. Both the companies have entered into a synergetic and symbiotic business association. Lasa gets its high growth opportunity to enter into new markets through our association with CIDIC. This is a win-win business arrangement for both the companies. The deal will positively impact the margins of Lasa Supergenerics by effectively reducing the manufacturing costs and favorably enhancing sales in Southeast Asian countries. Owing to the quality of our products and the goodwill of our new business partners in these territories, this is another important step in meeting our desired targets. Our company is in a phase of evolution and growth, and we will strive hard and deliver on the expected lines. CDK has recognized Lasa Supergenerics as a first choice customer, enabling us to source intermediates at a competitive price from China and Japan and on longer credit terms. This will also help stabilize the working capital cycle and also help Lasa Supergenerics to source right material at right price for its products. CDK will sell Lasa Supergenerics finished goods to Southeast Asian countries. CDK has significant recognition in these territories for supply of quality products. For any chemical company, the biggest risk is dynamism of the regulatory norms. These norms keep on changing. Lasa is aware of this fact and we are committed towards adopting clean environment policies. We are aware of our responsibility in building a sustainable ecosystem. We plan to add more products to our portfolio slowly and steadily. This will be achieved using the catalyst chemistry, which is always going to remain the core expertise. And hence, we will continue to file process patents, rather catalyst patents for the same. At the same time, we also remain focused on backward integration, which is another core part of our manufacturing process. Having said this, I would now like to move towards our quarterly and 9-monthly financial performance. The financial for the year to date has been in line with our expectations in terms of quality, revenue and profitability. Net revenue from operations Q3FY18 was 61.19 crore in this quarter. EBITDA stood at 13.68 crores with a margin of 22.44%. Net profit, that is PAT, was 3.11 crore after a deferred tax of 91 lakhs. EPS for the quarter was 1.36. Coming to the 9-monthly figures, 9-month FY18 sales stood at 187 crores. EBITDA for 9 months was 44.68 crores with a margin of approximately 24%. Net profit for 9 months was 19 crore approximately. EPS stood at 8.23. I would like to state here that Lasa is endowed with an excellent team of professionals who have been working tirelessly to bring this company to where it is today. I thank each member of my team for their contribution. Thank you very much, and we can now take the questions.
Thank you very much, ladies and gentlemen. We will now begin with the question answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. A reminder to all the participants in the conference, if you wish to ask a question, please press star and 1 at this time. We take the first question from the line of Aniket Titte from Individual Investor. Please go ahead.
Good morning, Dr. Omkar.
Very good morning, Mr. Aniket.
Yeah, I was wondering if Q3 is typically softer than Q2 with respect to revenues. Is that how it typically works for us?
Our Q2 is very good because it's a rainy season.
Okay.
Q2, there is a lot of deworming campaigns which are going on.
Okay.
But anyways, it varies. See, this I was saying about India, but if you say worldwide scenario, then it all depends. See, because, we are growing by... We are not growing with the growing market. We are rather growing by taking the share of the competitors.
Correct.
So right now the growth will only depend, the market is very big. So our growth will not depend on the, seasonal fluctuations in the market. Rather, it will depend on how much competitor shares I am able to corner.
Okay. Sir, one more question. The depreciation seems to be lower at 4.4 crore versus 6.1 odd crore.
Yeah.
So, we were expecting around 6 odd crore per quarter. So, is there a specific reason or we can expect the 6 crore level from Q4 onwards?
What I am assuming is, we will maintain the same run rate of approximately what the depreciation is going on. Approximately we are assuming it to be 15 odd crores,
Okay.
entire year. And actually the depreciation is a very versatile thing. It is from the last month, as per the Ind AS norms, we have started using the 3-shift depreciation method, which is because of which in the last quarter the depreciation came to around 6 odd crores, and this month it has come down. The further clarification over the depreciation calculation method, if you want very specifically, then I can connect you to my accountant separately. You can discuss with him.
Sure.
I'm more of a technical entrepreneur. I mean, so I can give you about business insights and whatever else information you require on the business front.
Absolutely. One quick question, sir. We stand by the guidance of around 20-25% growth in top line and bottom line. Is that what we stand by?
Yeah, of course, 20 to 25% is what I am been promising, and will certainly deliver it. Even the operating profits also I have given a clear indication for this year, which is around 22% and above, which will be strictly maintained.
Okay, sure. The reason I asked was because the crude prices were, heading upward.
Yeah.
So that's the reason, the top lines perhaps,
What happened in the last quarter, the crude prices were severely impacted. Now this effect to get percolated towards the customers, it takes a little of a time. So already one quarter is now passed by, and we have already communicated the prices with the new prices to the customers, and also they have started accepting it. So there is no...
So with a lag of a quarter, then the prices can also be passed on, the increase in prices.
Correct.
Okay. Perfect. That's it from my side.
Thanks.
Thank you. Before we take the next question, I would like to remind all the participants, if you wish to ask a question, please press star and 1 on your touchtone telephone. Next question is from the line of Sarvesh Gupta, Maximal Capital. Please go ahead.
Good morning, sir, and congratulations for a good set of numbers. Sir, my first question is, if I see the last 5 quarters of your results, our sales has been in a very tight range of 59 to 65 crores. So there is no acceleration that we are seeing in terms of revenue growth. So, while we are growing because of from last year, but the other way to look at growth is that FY17 we grew at 47%, but FY18 we are significantly decelerating to 20-odd%.
This may decelerate in the future also. Let me be very clear. Because, we cannot grow at sea. In 2 years back, our growth rate was 100%. Now we cannot maintain the 100% growth rate because, the assets which are available, which will enable me to produce only that much amount, which is practically viable. So, the growth rate is always, in any fast-growing company, the earlier stages growth rate are always, pretty good. And when the company reaches a sustainable level, then the growth rate is decelerated. That is quite obvious, sir. That is quite obvious.
Yeah, but even quarter-wise, last 5 quarters...
Oh, sir, let us not compare amongst the quarters because, see, this is a dairy industry, basically veterinary industry, and we get business from both ways, by getting the competitor share as well as by from the increasing market also. And there are a lot of ups and downs in this veterinary dairy business. So it all depends on the deworming campaigns, the tenders of the government, and also it may be like this, that the first quarter is good, then the second is bad, then again the third is good. So this happens. 2-3 crores aage piche, that is quite obvious. I mean, it's not in our hands.
Understood. And secondly, our finance cost shot up.
Yeah, the interest cost has shot up because of the 20 crore of additional borrowing in the form of working capital. The business has grown since last 2 years. There hasn't been any incremental addition of working capital, sir. So we have got at working capital loan sanctioned. That is typically the CC portion, which is sanctioned from Axis Bank to the tune of around, say, 12 crores. So that is being added. The interest portion of that is being added. Nothing else.
Thank you. Before we take the next question, I would like to remind participants, please limit your question to 2 per participant only. You may come back in the question queue if you have a follow-up. We take the next question from the line of Daspal Man from Punna Investment. Please go ahead.
Hi, Shankar. I have 2 questions. First of all, if you can enlighten us on all the management changes going on, including the CFO turn. And secondly, I would like to have your opinion on all the growth outlook going forward, preferably 3 to 5 years out. I know you talked about taking share, helping you gain some growth, but if you can light on both growing TAM, total market size which you're catering, as well as just the margin profile of the growth going forward.
Let us go step by step. Your first question is, the corporate actions which are going on. As about it, one of our CFO has resigned very shortly. As you know, in any company, good people are being substituted with, the less efficient people are being substituted with more efficient people. And this is the ongoing things which are going on in other companies also. And we will also maintain the same hierarchy. Certainly, Minesh Bhosle has left for good, and certainly the one who is going to be substituted for him will be the best. So you can even definitely access him in the next conference call, or maybe in a 1:1 meeting if you want, you can have with us, with Lasa Supergenerics. We'll explain you. Secondly, your second question according to me was a guidance for next 3 to 5 years. Certainly 5 years guidance I cannot give, but at least for next 2 to 3 years, we will be growing at around approximately 20%, 20 to 25%. It will all depend on acquisitions, opportunities like acquisitions, or else forward integration, or else maybe even it will to an extent depend on the infrastructure which would be made available right now using our unit number 4. So, but the rough idea which I can give you is around 20% on a very conservative basis.
More than the number itself, I was talking about total addressable market, how directionally how we are planning to go, number of new products, and even if I don't care about the number per se, but directionally and just the quality of that growth, if you can talk about.
Well, the number of products which we are currently manufacturing is 15, and we will be adding on around approximately 1 to 2 products every year. Conservatively, and these products will be multi-bagger products only, the products which are having a potential of minimum 100 crores each. So such kind of products will be added, and definitely whatever will be added will be in veterinary segment only. So this is what we stand by. So
thanks a lot.
Yeah.
Thank you. We take the next question from the line of Jatin from GS Investment. Please go ahead.
Hello, sir. Congrats on a decent set of results. My first question, sir, would be how much R&D cost we capitalize in this quarter?
See, annually, I feel that if you ask a particular figure, what kind of R&D expense we do, it is in the extent of around 5% every year of the top line. 4 to 5% of the top line will be R&D cost.
And sir, everything will be capitalized, or we expense it in P&L also some part?
Certainly we expense in P&L. Whatever equipments are being bought, whatever reagents are being bought, and whatever catalysts and other reagents and chemical stuffs is being bought is being capitalized, because that doesn't go to the revenue directly. And whatever salaries and all are there, that we expense out.
Okay, sir. Actually, I was looking at Omkar specialty results. They capitalized 53 crore R&D, which was booked in this quarter as an exceptional loss. So are we worried on that front, as in something can happen on that front in our company or not? Are we happy?
Certainly not. Certainly not. I again, wish to take this on a very, very clear note that both the companies are different. Both the companies have different promoters with different financial disciplines, with different lookouts, different visions and everything. So please don't correlate both the companies.
Sure. Okay, sir. And sir, what is our current net debt, and how much is it coming from promoter group, and how much is from banks and financial institutions?
I have lended 27 crores to company as on the date, okay? And this money of 27 crores, out of which around 24 crores was obtained from selling of Omkar Specialty Chemical shares, which I got in the demerger, and remaining 3 crores is on my own funds. So total 27 crores is my funding, and Axis Bank has given us a sanctioned CC of around approximately 50 crores. So total, plus there is one ECB loan of Bank of Baroda which is going on. That is around 22 crores of ECB fund, which is a long ECB. So see this 22 plus 50, that comes to around 72 plus my, so around 100. Approximately 90 odd crores is the total debt.
Thank you. We take the next question from the line of Umang Gandhi from Pharmacology. Please go ahead.
Good morning, sir.
Yeah, very good morning, sir.
Yeah. I just wanted to know that, likewise you mentioned that Omkar Specialty is a different identity, but are we related to them in any business dealings? Like, are we sourcing any materials from there? Are there any billings from OSCL or not?
Gram of material is being purchased from them, nor a single gram is being sold to them. So
you are purchasing but not
we are completely different from business perspective, customer perspective, everything.
Yes, sir. I am very much clear about that. Thank you so much. And one more.
Not having any connections with them. Even my personal guarantees with them are no longer existing.
All right, sir. And regarding the margins on the EBITDA front, we have been maintaining a run rate of around 20 to 22%.
Yeah.
With the new products coming in, like you said, would be a multi-value products. Do you think the margins would be expanding with them?
Really, I can't comment over this, but certainly it won't be shrinking.
All right. That is fair enough.
Thank you. We take the next question from the line of Preet Nakarshe from Wealth Financial. Please go ahead.
Yeah, hi.
Hi.
Good morning. One quick question. This is regarding the deferred tax.
Right.
So we've seen quite a few changes over the last couple of quarters on deferred tax in Q1, Q2, and now in Q3. Would you be able to shed some light on that?
Very frankly, sir, I'm an MSc PhD and my core subject is chemistry. So if you want to have more insight and deep, in-depth, working of the understanding of the deferred tax, I will put you in touch with my senior accountant and he will be very confidently able to explain you regarding the deferred tax.
Got it. Okay, no worries.
Right. And
one more question.
you can put it, you can contact this bridge IR people. I'll immediately, put you in touch with the relevant person who can explain you about this. We can make a point for this.
Okay. One more question.
Right.
This is regarding coming back to the debt. So, in prior meetings and prior calls, I think the view was that there wouldn't be any additional debt being taken.
Yeah, of course. I stand by it. In fact, debt will be reduced.
Exactly. That's what happened last time. So, what initiated the need to add the additional debt after,
That is working capital. We have not added any debt, sir. There is no long-term borrowing. In fact, long-term borrowing is paid off. In the last quarter, when the concall was there, the long-term borrowing was 24 crores. Now it has come down to 20 crores approximately, even less than 20 crores.
Oh, okay. That's great.
Okay, so this is whatever is there, this is working capital purely. And in front of the working capital, there are debtors and inventories present. So, if you add debtors and inventories, so it will match to the working capital very clearly.
Got it. Okay. Thank you.
Thank you very much.
Thank you. Before we take the next question, I would like to remind participants, if you have a question, please press star and 1 on your touchtone telephone. Next question is from the line of Ravi Prabhakaran, individual investor. Please go ahead.
Good morning and congratulations, Dr. Omkar.
Thank you very much.
Yeah. It's quite heartening to see you could maintain the promised 22% above margin and revenue growth also. At this stage, I do not have any questions, only some suggestions.
Yes.
Suggestion number 1 is, the company is always in P2T, in BSE. Unless you interact with them and find out the real cost,
right,
it will continue to remain at P2T and it will not reflect the fair price. Even that may become an impediment for the rights issue.
Right.
Suppose somebody can hold on to a longer time. An investor who comes to the market, if he requires money in an emergency situation, he should be able to sell it and take it away.
Right, very true.
And the stock does not reflect a fair price unless it is liquid and there is a liquidity premium available.
Right.
So kindly take care of that. Just you need to interact with them.
Certainly, sir. We will certainly take this into consideration and see what appropriate measures can be done for this.
Yeah, because individual capacity I can also write to them, but that doesn't may not cut much ice with them.
Perfectly right, sir. Perfectly. I have noted it.
One. Yeah, that is one. The second question is, see, the shareholding pattern is, though I could work on that one, I could find out the real situation. It is confusing to many. It's creating enormous confusion. So it is better to put it in a simpler shareholding pattern and convey it to the investing community.
It is already communicated and conveyed to everybody, sir.
That is true. I went through that one, but really it doesn't convey clearly. One has to go through the structure very carefully quite some time, spend a lot of time.
I'd like to clarify over this phone call. My holdings post the swap will be 36% approximately. It will be more than 36%.
No, I know that. I am aware of this because I have worked through that one continuously. But if we see any forum, this is creating a lot of confusion among many investors because it is not put in the black and white like how many shares, Dr. Omkar, how many shares, including that pledge.
So what should be done? What is your suggestion for this?
Suggestion is put it very clearly. If you want, I can put it in an Excel file and then send it across to you.
Please do that, sir. I'll certainly like to do it.
Yeah, and anyway, keep up the good work.
You can mail your the format on cs@lasalabs.com.
Yeah, I will do that. I have the info.
Please do.
Keep up the good work and all the best for the future.
Thanks, sir. Bye.
Thank you. We take the next question from the line of Vinay Pai, individual investor. Before that, I would like to remind the participants, if you have a question, please press star and 1. Over to you, Mr. Pai.
Yeah. Good morning, sir.
Yeah.
My question is regarding the upcoming rights issue of 100 crores.
Right, sir.
Will you be able to explain as to where will the funds be deployed and
Perfect. First of all, the rights issue is we have taken a blanket approval of 100 crores. That doesn't mean that it will be of 100 crores. Okay, so that is one thing. So we will appropriately decide, seeing the market conditions and seeing the exact capital needs of the company. Then only we will decide how to price the rights issue and what total funds is needed by the company, and it will be judiciously done at the appropriate time. Anything which will be done by taking into account that it should be a EPS accretive method of raising money. So it will not be at a cost of taking a toll on the EPS. That is number 2. Thirdly, whatever money which is generated through rights issue, that will be deployed in paying off the long-term debt, which is approximately 19 to 20 crores, which is balanced as of now. Remaining part of the issue will be used for doing acquisition in pharma space only. I am repeating it that we are very keen on going into forward integration into formulations. So that will be practiced. I mean the remaining of the money will be utilized. The part of the money will be utilized rather for doing the acquisition for the growth of the company. So that would be the objects of the issue.
So how far is the rights issue from today? Any guidance you can give, sir?
We have just got our votings, e-votings and ballot votings in our favor, and now we will be filing approximately, if you ask me, by end of February, we will be filing the letter of offer with SEBI. SEBI usually takes anywhere between 45 days to 3 months, anytime. I mean, it all depends on their load and their priorities. So after that, you receive a ticket from the SEBI, then within 15 days you can open the issue. This is what is being communicated to me by my merchant banker. So typically, if you say me what is the timelines in concrete, it may be around June.
Is it 2 months?
June.
Okay, June. Fine, sir. Okay, that answers my question. The next one is, I heard that you have filed several process patents, not product patents, right?
No, these are product patents, sir. These are not exactly process patents. See, what is a process patent? Process patent is a patent which is given for a process. Okay, that is that is subject to infringement also many times, because even if somebody wants to infringe it, they can do a very minor changes in the process and claim it as a new invention. Ours is a product patent. See, we manufacture catalysts for our own consumption, and these catalysts are proprietary. So we don't actually patent our final finished products which we are selling in the market. We are proprietary something which is used to make the finished product, in a very efficient way. So catalysts are patented, not my products. The products which you are seeing on my website, those products are not patented. The catalysts which I am using to make those products are being patented. So this is an indirect protection barrier for our entry, for entry of new competitors in our business.
Thank you. We take the next question from the line of Aniket Tite, individual investor. Please go ahead.
Sir, quick question. Where can we find the annual report? Because I am unable to find it on the website. So has it been uploaded? Am I able to not find it?
Sorry? Audit report is uploaded, right? And where is the
annual report?
That was on the check period. See, when the annual report was out for FY17, that was unlisted period. So FY17 annual report you won't be able to get on website as such.
Okay.
Yeah.
Okay. All right. Yeah.
So do you have some more questions?
No, that's it from me.
Thank you. Before we take the next question, I would like to remind all the participants, if you have a question, please press star and 1 on your touchtone telephone. Next question is from the line of Devahar, who's an individual investor. Please go ahead.
All my questions are answered. Thank you.
Thank you.
Thank you. Well, we take the next question from the line of Jatin from GS Investment. Please go ahead.
Hello, sir. In terms of leaving aside acquisition plans, what is sustainable capex that we see for next 2-3 years, annual capex?
Annual capex which we see for next 2-3 years will be in the range of around 15%.
15% of sales every year?
Yes, sir. That will be the annual capex.
Okay. And sir, we gave EBITDA guidance of around 22%. We have maintained that over last 3 quarters. But below EBITDA items, that is depreciation, interest and tax, have been very fluctuating for last 3 quarters. Any guidance you want to give for PAT level?
So PAT level, I really don't see PAT as a real profit because as you said rightly, depreciation, interest and deferred tax and many more things come in between. And then, as a growing company is in a need of finances, in the need of working capital. So as the working capital grows, automatically it will put a hit on the interest portion. And as the capex grows, it will put a hit on the depreciation portion. But any which way we are trying to maintain, as a best of our possibility, we are trying to maintain the PAT level to approximately 10 or maybe a little below. Nothing very much less than that.
Okay. And working capital we maintain around 60 days of sales?
No, it is actually, I want to bring it down to less than 50 days in fact. So almost you will see that, now it is almost 55, 56 days, which is almost flat since last few quarters. And I wish that if there is some capital infusion in the company and some creditors are being wiped out, then certainly working capital days, we have scope to, shrink them, much to a better extent.
Okay. Thank you. All the best for the future.
Thanks, sir.
Thank you. Before we take the next question, a reminder to all the participants in the conference. If you wish to ask a question, please press star and 1 on your touchtone telephone. Next question is from the line of Nanda Perla, individual investor. Please go ahead. Nanda, your line is unmuted. Please go ahead with your question. Well, as there's no response from the current participant, we take the next question from the line of Sarvesh Gupta from Maximal Capital. Before that, I would like to remind all the participants again, if you have a question, please press star and 1. Over to you, Mr. Gupta.
Sir, can we get the inventory, debtors and payables number as of December 31st?
Inventory, debtors and payables, inventory, FY17, this is Q3? Yes, total inventory stands at 37 crores, rather 38 crores, 37.9 crores. Receivable stands to 58 crores. And payable stands to 59 crores. 57 crores, sorry. Payable stands to 57 crores.
Sir, and fixed asset and CWIP number?
Fixed assets,
6 crores. 6 crores.
What is CWIP? CWIP is 6 crores.
Okay.
And that has come down drastically because the unit number 4 is being commissioned, no?
Yes. And fixed assets, sir?
Fixed assets, total fixed assets is how much? How much?
Total 200 crores. Gross block.
That is, total gross block is 200 crores, sir.
The net block, sir?
Net block is 176 crores.
176 crores. Okay. Thank you, sir.
Thank you. A reminder to all the participants in the conference, if you wish to ask a question, please press star and 1 on your touchtone telephone. Well, that seemed to be the last question. Well, sir, we have a few questions. We can take that up, right? Shall we take the next question from the line of S. Gopal, individual investor? Please go ahead. Mr. Gopal, your line is unmuted. You may please go ahead if you have a question.
Yeah, thank you. So one quick question, given that the plant 4 is commissioned during the last quarter only, is it got stabilized, and what is the impact it is having on the top line as well as the bottom line?
So on top line, at least immediately there will be no impact. I think the top line impact will come in next year only. As far as bottom line impact is there, it is quite evident, because of the backward integration of one of our product by the name of dichlorophenol. Our prices for making one of our critical product, final finished product by the name of albuminol has gone down, and because of one account of which there is an impact on bottom line.
Okay. So is it being utilized 100%, sir?
No. Currently we have utilized only, say, 500 tons. The total capacity is 4,300, out of which only 500 tons is utilized.
So going forward, by what time we can expect?
By FY19, I think we will be able to utilize 1,000 tons approximately.
Okay.
By FY20, we will be able to utilize around 2,000 tons. And by 21, the remaining amount will be utilized. So this is the utilization, stepwise utilization, which is possible.
Okay. And you talked about the acquisitions and release of the new products. Is there any discussions that are happening in this trend on the acquisitions? And is there
yeah. That's the reason why I was so confident in telling you that, we are looking out aggressively for acquisition. And the acquisition will be as a result of the forward integration of our existing products only. So that is something on the table right now for me.
Thank you. We take the next question from the line of Shiv Kumar, individual investor. Please go ahead.
Good morning. Actually, sir, I'm an individual investor, and my basic question is, how long will it take for this Unit 4 to be fully commissioned? First question is it a backward integration unit or is it a forward integration unit? And second is, how much time will it take for it to be fully go online? Those 4,500 tons we keep hearing in press releases, etc.
The total capacity of this unit is 4,300.
Yes, sir.
The chemical manufacturing or pharmaceutical manufacturing company, the optimum utilization level is always 75 to 80%. So considering 80%, say around 3,500 tons is the actual utilization out of the 4,300 tons. So this 3,500 tons will be used and capitalized in this way. In FY19, 1,000 tons will be capitalized. FY20, again more 1,000 tons, that is cumulatively 2,000 tons. And FY21, the remaining 1,500 tons will be capitalized. So
this is backward integration or is it a lateral expansion? What it is?
No, in the first phase in FY19, we are completely utilizing this unit for backward integration.
Okay, sir. Okay, fine. That's fine. Okay.
That's it.
Okay. And that's fine. Okay. And I came in slightly late, but can you give us some updates on the rights issue?
Yeah, as far as rights issue is concerned, we are yet to file our letter of offer with SEBI.
Yes, sir.
Once the letter of offer is ready by the merchant bankers and the lawyers, we will file it with SEBI. SEBI takes anywhere between 45 days to 3 months. So it is all depends on their workload and their priorities and if they have any questions and all. So we take a pessimistic view over this of 3 months, say for example. Then once the SEBI ticket is available in your hand, you can open the issue within 15 days. So yet we are expecting the issue to get opened by June.
Yes. Okay, sir. Okay.
Right.
And it will be an expansion of equity capital of how much? 10%, 20%? How much it will be?
Expansion in the equity capital?
Yeah.
Very premature to comment, sir, right now. It will all depend on the pricing, na?
Okay, sir.
And the size of the issue also. So it will depend on that particular time, seeing the conditions. Anything which will be done, we'll see to it that, it is a EPS accretive procedure of raising funds. It won't be tolling the EPS for the sake of raising funds.
Okay.
Thank you. We take the next question from the line of Aniket Tite, individual investor. Please go ahead.
Thanks again, sir. Dr. Omkar, when we say the acquisitions are being, considered, any rough size or a higher, cap that we are looking at and how it will be funded?
Very good question. I am looking out for an acquisition in the range of say around 20 to 22 crores.
Okay.
20 से 22 करोड़ के बीच में acquisition हो सकता है अगर करने जाए तो. typically saying about, multiples, what is the multiples of the acquisition? Say typically a 1x of turnover will be the cost of acquisition.
Okay.
And second thing is the acquisition will be having all the regulatory approvals, which will be, of course, an intangible property for the acquisition. So regulatory approvals like US FDA or maybe EDQM or whatever is available. So it will be in that
this
space.
will be in veterinary API space only.
In pharma space only.
Okay, veterinary API space.
Veterinary pharma space.
Okay, okay. And so if it's 22 crores, then perhaps the rights issue, if it perhaps overlaps, that can also be taken care of by the rights issue. Is that what we are thinking along those lines?
Let us see how to deploy the money judiciously.
Okay.
We will have a practical view over this. We will have a second round of concall after whatever acquisition is to be done. And then we can conclude how, we can have inputs from other investors also how the money is to be deployed. But certainly whatever will be done in an EPS accretive way.
Sure.
Right, sir.
Sure. So two things, that I'd like to share is one thing, you've been very clear that, whatever decisions are taken would be EPS accretive. You've maintained right from the start and, that is from the investor community, that's a big relief.
Yeah, that is very important. No?
Yeah, so that is very important from your side. So I must, and whenever some major decisions are being taken, you make it a point to come online. If not on a con call, at least you put it up, as a disclosure on the exchanges. That is also an important part.
Yes.
So, I'd like to thank you for both of these.
Yeah. Thank you very much.
Thank you. Well, that was the last question. I now hand the floor over to Dr. Omkar Hadlekar for his closing comments.
Yes, sir. Thank you, everyone. Thanks, my friends, for joining the con call. If you have any queries, you are very much free to write to our company secretary at cs@lasalabs.com or else communicate with our investor relation agents, Bridge IR. Thank you very much again.
Thank you very much. Ladies